Hey everybody, happy Thursday, December 4th. It's about 8 a.m. on the West Coast and it's time for another market update. Last week was a short holiday week, so let's see if we kept up the momentum from the week before. Rates have started to come back down with the odds of a rate cut for the Fed upcoming going up higher. So that was great to see. Let's see what happened on obviously on a short holiday week. We don't get as much data. There's not as the markets aren't open certain days and so forth. So the first thing that we got was a little bit of narrative news, not data. But it sounds like President Trump has chosen his new Fed chair. He would be replacing Fed Chair Powell, Jerome Powell. I believe his term ends in May of this upcoming year, 2026. So the three candidates everybody has focused on have been Kevin Warsh, Governor Waller, Fed Governor Waller, and then Kevin Hassett, who's the director of the NEC. I would prefer Fed Governor Waller just because he seems like he'd have more insight on what's going on, and he's served in a different role at the Fed already. But it sounds like, according to the New York Times, a Fed mole, who everybody thinks has the inside track on what's going on in the Fed, Nick Tamaros, he said that it's going to be Kevin Hassett. So we'll see what happens. It sounds like it will happen before Christmas. But again, unless they remove Chairman Powell, his term wouldn't start until May. So that was the first little bit of news we got. Next thing we got. So we got November ADP. So this is the last big job report we're going to get before the Fed cuts rates, and it showed even more labor market weakness. So it's supposed to come in really low at about 40,000 jobs created. It came in at negative 32,000. So that's a big, big low number. And so over the last 4 months, the total is 17,000 job losses over the last 4 months. So the last third of the year, or not even the last third of the year. We still got 1 month they'll show for December, but last 4 months, 17,000 job losses combined between, even the job gains and then losses like today. And as you can see, the breakdown, it's all small businesses. 120,000 jobs lost on the small business side, where medium and large businesses, added about 90,000 jobs. But 46% of workers employed in our country are by small businesses. So that is not a good sign for our economy, according to this data. It'll be interesting to see what the BLS jobs report shows. It doesn't do a very good job looking at small business job creations. They do that birth death model. So that number might be higher because, they're not getting an accurate look at it, where this one, the ADP, which is actually looking at private payroll data, came in, 120,000 jobs lost for small businesses. By sector, 6 out of 10 were negative. And it looks like the big gainer was education and health services, which again isn't usually affected by the economy. Professional and business services dropped by 26,000 jobs. And then the other thing that moderated a bit was wages, stayers, and switchers both came down a little bit. So looking at that in graph form, it really can kind of see the kind of the job market weakness we've had. So a lot of, what's that, 4 different negative numbers over the last, in the second half of the year. And definitely you can just draw a line on a downward trend. So that hopefully is enough data to show the Fed, like, hey, the job market is weak. We got to cut rates. However, on the other side of things today, we got initial jobless claims, and that came in at, I think it was the lowest number since 2022 at 191,000 job claims for people filing for unemployment. But again, it was a holiday week, so it's a short week. Kind of have to ignore that. Markets are showing a little weakness on the bond side because of this job report. But again, it's a holiday week, so we really and these numbers have been low overall. So next week we'll have to see in a full week what it comes in at. And the other job thing I don't have on here that came out though was the Challenger job cuts. Where basically they're showing how corporates are, how many layoffs are they going to do, and that's at, I think that year to date it's at the highest level since 2009. So again, when you take the pandemic out, so again, not the strongest look at the job market right now. So hopefully that is something to get the Fed to cut rates. We got some delayed reports. We found out different reports can be delayed. I think that's the October CPI is being canceled. The November CPI, we're supposed to get December 18th. We are going to get December 18th, but it's missing most of the month-to-month data, so that's going to be a little weaker. And then PCE PCE we're going to be getting tomorrow. So that is a big report we'll talk about here in a second. Average 30-year conventional is at about 6.25. It hasn't updated yet this morning, but yesterday it was at 6.23. Last week it was at 6.22. So right around 6.25. Kind of waiting for the Fed to do their thing, and like we've talked about, really to see what the Fed says about going into the new year, into 2026, and what they'll do at their meetings then. Important dates. Like I said, we got that Fed meeting the 10th. So that's coming up. What would that be? Next Wednesday. Right now, it's showing 87% chance they cut rates. So we want that to happen. That sounds pretty good. But again, 13% chance they don't. But we'll see what happens then. But the only thing that could really, rain on our parade and change things would be this PCE report that comes out tomorrow. So that's inflation. The Feds. That's that's something they concentrated quite a bit on the last couple of years. So if that number came in crazy high, higher than expected, then maybe we could see the Fed not cutting rates at that meeting. But right now, most market ups, as long as it comes in near estimates or not too far above estimates, we shouldn't have anything to worry about. But if all of a sudden you hear something on the news about inflation jumped a ton, then know that that might be put this cut on December 10th to risk or at risk. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, have a great rest of your week, guys. Thanks a lot.